And welcome to Phil's Gang YouTube channel, the unfolding of the stock market crash. I was away on vacation, but when I was on vacation, I also had a lot of time I normally don't have to read and catch up on things. And one of the things that I was right about is I've been saying to my members for a long time now that the market is ready for a 10% correction. You always get a 10% correction first, and then it always rallies back, maybe holds for 2-3 months, and then you get finally your big crash of 60-70% or more. So we are getting closer to 10%. When I was reading, I noticed all the big banks, the big boys, they're all saying the same thing that I'm saying, a 10% correction. Let me show you something on the chart here. I showed you this chart some time ago. This pattern tells you we're getting closer to a correction. This was in February 2020. We dropped 31%. And, of course, that's when we had that big drop from the pandemic, as they called it, right? But it was going to drop even without the pandemic. But what is more important in this drop is how we accelerated to the upside so quickly, about 131%. The S&P. Talking about the S&P. How could that happen? How could you drop 31% and then within 30 days you start going up 131%? Because the market is financially engineered. Now, I was talking about that today in my radio show. Everybody on the Fake Business News Network was telling us the reason the market's down today is quadruple witching. Well, that's not true. Okay, now quadruple witching, in case you don't know what that is, it simply means that every quarterly month, March, June, September, December, the derivatives, which are tied to stock index futures, stock index options, stock options, period, single stock futures, they all expire at the same day. That used to create an uncertainty in the market. It doesn't do that anymore. Not since 2008, when the market has been financially engineered with quantitative easing and QE. So what has got the market spooked, and why you're seeing this kind of pattern is telling us we're heading for a correction, is because the stocks that drove this market would only have benefited because of a closed economy. Document Sign, DOCU, up 60%. Zoom, up 130%. DDOG, data processing, up 80%. EVBG, Everbridge, up 100%. W, up 100%. Shop, 85%. Then you get the regular Apple, 160, Microsoft, 126, Amazon, 108, Google, 188, Facebook, 159, Netflix, 100. Now, does it make sense to you? It's just going to continue to go up. Do you think that Apple will continue to go just another 160? It's like magic. Most people do. 80% of the people in the stock market lose money all the time. You know, I hope I can convince you, if you're not a gang member, come and join my gang, the 20% Club, meaning that you should be able to get out of the 80% and get into the 20%. The 20% consistently make money. And what is the difference? Why does 20% consistently make money and 80% don't? Because they don't know how to reverse their position. They don't know when to get out of the market. The color-coded chart tells you. And what we're heading for right now is why you need to learn how not only to when to get out, but I want to show you how to sell the market short. Once you know how to sell the market short, you don't give a damn anymore what the economy's doing. You could care less, or the market. Who cares? Because you're going to make money on the way up, you make money on the way down. And the reason we're having problems is because of the banks. They're very worried. Because remember all the stimulus that's been keeping the economy up, the forbearance on apartments. They're sending checks to people to pay back rent. The government's paying back rent, paying utilities. I mean, on, and all the different stimulus programs. Those are all being tapered. That's the tapering you need to worry about. There is never going to be a tapering of the QE, the $125 billion a month that they print to buy stock, to buy treasuries to drive the interest rates down. That will never happen. The stock market will crash 60, 70, 80% before that will happen, because they can't. It's impossible. That's one of the consequences of keeping rates too low for too long. You can't go back and raise rates. And this is the pattern that tells you. So again, if you really believe all these stocks that benefited from the economy being shut down are still going to benefit with the economy opening up, what are you, nuts? Be prepared. Now let me show you something when I say that. Be prepared. Give you an example. Right now, we have more proof. Here's the spiders, and you can see these spiders right now are going up, right? Spiders are going up. But what's the problem? Spiders are going up, but we have transports going down. That's a terrible divergence. You don't want this transports going down while the spiders going up. That's very negative. Also, you don't want the spiders going up and why the small and mid-cap stocks stop going up. See how they stopped going up? So what's happened is the spiders have gone beyond, just keep going up, while the small and mid-cap stocks stopped right here. They, remember the way it works, they push up the S&P, but they stopped and went sideways. Well, how's the market going up? Well, how do you think? Financial engineering. This is all proof of a correction that's coming. The divergence between transports, spiders, between small mid-cap stocks and spiders. Also, more proof, gold miners are dropping. When gold miners drop, what happens? It pushes down gold itself. And when gold breaks, that means the S&P will automatically break. And guess what's happening? Gold miners are going down, gold is going down, and we're getting ready for, again, the spiders to drop. I mean, the proof is just undeniable what's going on here. Anybody that thinks that this is not going to happen, that we're just going to keep going up because the market is magical, is nuts. So here's the proof right here. Look, anytime you're in a stock and the market's going up, wouldn't you want to know when it's ready to go down? That's why you're in the 20% club here at Philstake. You're not in the 80%. See, only 20% of people make money because they know when to get out. But we made it easier. It turns red. Look at that. Does that do it on your chart? I hope not, because somebody's violating my patents. Here's another one. Look, stock going up, doing beautifully. Turned red. And then all we do is switch our position and short it. So you make as much money going up as you make money going down. That's how you make money, and that's how you become a member of the 20% club. But even better than that, we also, let me show you a chart that Steve was in. This is Apple, and Steve was at our education program. Our chart will also give you a call to action. See how it was going up here? So he was buying it, was going up. Our members were buying it, was going up, right? Doing fine. But then yellow, it turned yellow. What's that mean? Well, remember, we have a tool that you click on, and what will happen, it'll turn yellow before it turns red to give you an advance warning. You see how that works? Nobody else has this. This is patented. So once you get to that point, do you have that confidence? So you're sitting there, and all of a sudden it starts turning yellow, right? And all of a sudden you know it's going to start turning red, and you make money then shorting it. How beautiful is that? Think about it, okay? How beautiful is that? So we do have a tool that gives you a call to action, okay? And that happens, as you know, right before it turns red right here. So, look, the market, we have plenty of proof as to why the market is ready to collapse. And if you really believe that these stocks that drove this market up from 2020 all the way up to where we are today. I'm talking about the S&P. If you really think these stocks like Zoom and Shop and all these stocks are 80, 90, and 100%, if you truly believe that these stocks are going to continue to go up like magic, then you're going to be in trouble, because it doesn't work that way. Because, again, the spiders, here they are. And we have our members in the spiders, okay? We have our members in these spiders. And again, same thing. We're warning them and telling them when this will tell them when it's going to turn red, okay? And here we go. See the yellow right here already? It's giving us a warning. Look at this. It's giving us a warning. We've been in these spiders for a long, long time. Long time. But now now we know as it turns yellow, we reduce a lot of our shares. If it turns red, we then short. That's how easy it is. Join my gang for 10 days. It's free. Check it out. It works. But let me tell you, this market is going to get a 10% correction very shortly. If it doesn't, that's fine. We'll continue to stay at our stocks, because we always have an alert telling us when to get out. Call to action. One last thing. I want to show you a stock that Jim Cramer recommended on Tuesday. Right here. NI is the stock. Okay. Make sure I get it up here. NI is the stock. Let me bring it back. On Tuesday, he recommends it. Let me explain. Let me play the cut for you here. You play that cut for... Oh, here it is. I got it.
My question is regarding a local utility company called NiSource, ticker NI. They have
now, there's a stock I want to own for everyone. With good dividend, fantastic management. Bye.
Fantastic management. Bye. But look, it was red starting back here. It gave us yellow, a warning. You would have been warned that money's coming out. And then that warning turned red. We went from green to yellow, the warning. And look, it stayed red all the way down. And he's telling this guy, buy, right there. This guy's going to get killed. If you're with us, you've been making money on the way down. Doesn't it make sense? I think so. And a lot of other people do too. Please join my gang, philsgang.com. Click on Working Investors. Hey, I'll see you on the charts.